How I Made $2 Million in the Stock Market by Nicolas Darvas. He wasn't a trader. He was a dancer, but he still made $2 million. Want to know how? In this video, I'll walk you through the exact steps Darvas used, from his early mistakes to the system that made him a millionaire. Let's begin with Part 1. Chapter 1. Canadian Period. Nicolas Darvas did not start his life thinking he would become a stock market trader. He was a young dancer who traveled from city to city with his partner, performing on stage almost every night. His main focus at that time was dancing, practicing new moves and preparing for shows. But everything changed when one of the people they performed for did not have enough money to pay them in cash. Instead, he offered them shares of a mining company as payment. At first, Darvas felt confused. He did not know anything about the stock market, and he did not even understand what the shares meant. He accepted them only because he had no choice. Later, when he checked the price, he saw that the shares had increased a lot. Suddenly, the strange payment had become real money. This surprised him and made him curious about the world of stocks. He began reading newspapers and asking simple questions about the market. He wanted to know why the price went up and what caused stocks to change. Even though he did not understand much yet, he felt excited because the stock market seemed full of mystery and possibility. The more he learned, the more he wanted to explore. This early experience was important because it showed Darvas that opportunity can appear when you least expect it. It also taught him that money can grow if you understand how the system works. Instead of ignoring this strange new world, Darvas followed his curiosity. His journey toward becoming a successful trader started from this small, surprising moment in Canada. Chapter 2. Entering Wall Street. When Darvas arrived in New York, he felt like he had stepped into a completely different world. Wall Street was busy, fast, and full of people who acted as if they knew everything. Large buildings, busy offices, and loud voices made him feel nervous, but also excited. He thought he would quickly learn how to trade if he listened to the experts. So he bought many books and newspapers. He spoke to brokers, analysts, and other traders. But the problem was that everyone had a different opinion. One person said a stock would rise soon, while another said the same stock would fall. Some people talked with confidence but had no clear reason behind their ideas. Darvas realized that the more advice he collected, the more confused he became. Still, he wanted to try. He started buying stocks based on tips and rumors. Sometimes the stocks went up, but many times they went down quickly. He bought too early, sold too late, and reacted too fast. He discovered that listening to others did not help him understand the market. It only made him copy their mistakes. This period was difficult, but very important. Darvas learned that Wall Street is full of noise, and most of it is not useful. If he wanted to become a good investor, he needed to develop his own thinking and stop depending on random advice. He began to realize that success would come only if he created a method based on facts, not feelings or rumors. This was the first step toward building the system that later made him millions. Chapter 3. My First Crisis. As Darvas continued trading, he faced his first major crisis. He had made some early profits from lucky trades, and this made him feel confident. But confidence without knowledge can be dangerous. He started making bigger and riskier decisions. He bought stocks without clear reasons and hoped they would rise simply because he wanted them to. The market, however, does not listen to hopes. Many of his trades went in the wrong direction. Stock after stock dropped, and Darvas lost more money than he expected. At first, he felt angry and blamed the market. Then he felt embarrassed and blamed himself. He began to understand that he did not truly know what he was doing. Instead of quitting, Darvas decided to treat this crisis as a learning moment. He asked himself important questions. 1. Why did I buy this stock? 2. Did I have a rule or a real reason? 3. Am I letting emotions control me? The answers were clear. He had no system. He acted based on tips, emotions, and excitement. This crisis taught him that discipline is more important than luck. If he wanted to survive in the market, he needed to stop making random choices. He began studying charts, price patterns, and trading strategies. He also learned that fear and greed can control people if they are not careful. This crisis became a turning point. It was painful, but it helped him build the foundation he needed to grow. Darvas realized he could become a better trader if he stayed honest, calm, and focused on learning. Chapter 4. Developing the Box Theory. After experiencing losses and confusion, Darvas continued searching for a system that made sense. He wanted something simple, logical, and repeatable, something that did not depend on emotions. During his studies, he noticed something interesting. Many strong stocks seemed to move in steps. They stayed within a certain price range for a while, almost like they were inside a box. He watched these price boxes closely. He realized that when a stock broke above the top of the box, it often continued moving upward. When it fell below the bottom of the box, it became weak and usually dropped more. This pattern repeated again and again across many different stocks. So he created a rule-based method. 1. Only buy when the stock breaks above the box. 2. Only sell when it falls below the box. 3. Do not guess. Wait for clear movement. This simple idea became his famous box theory. The box theory helped him stay calm. It removed the need to predict the future. Instead, he reacted to clear signals. It also protected him from emotional decisions. He no longer chased tips or rumors. He watched the price, trusted the pattern, and followed his rules. Darvas knew this system would not be perfect, but it gave him structure. Instead of chaos, he now had a framework. This chapter is where his trading journey truly changed. The box theory became the tool that guided him toward consistent success. Chapter 5. Cables Round the World. Even after creating the box theory, Darvas still faced a challenge. He was always traveling for dance performances, moving from country to country. Many traders might think this was a disadvantage, but for Darvas, it turned out to be helpful. He couldn't sit in front of a screen all day. Instead, he received stock prices through cable messages. These messages were simple, just numbers and symbols. There were no emotional news stories, no rumors, and no one shouting opinions at him. This limited information helped him stay focused on what truly mattered: the price. Because he was far away, he could not overreact to every small movement. He had no chance to panic sell or jump into a trade without thinking. He simply checked whether the stock had broken out of its box or fallen below it. If it did, he followed his rules. If it didn't, he waited. This experience taught him a powerful lesson. Too much information can hurt decision-making. When traders see too many charts, news updates, and opinions, they often get overwhelmed. They make fast decisions based on fear or excitement. Darvas avoided this problem because of his distance. His trades became calmer, more disciplined, and more consistent. He realized that being physically far from the market helped him become mentally closer to good decisions. This chapter shows that sometimes the best way to win is to keep things simple and stay away from noise. Chapter 6. During the baby bear market. At this point in his journey, Darvas faced a new challenge. The market entered a baby bear phase. This means the market was starting to weaken, but it wasn't a full crash. Many stocks slowly fell or moved sideways. Traders felt uncertain and nervous. Some tried to force trades, hoping to catch small gains. Many ended up losing money. Darvas chose a different path. Instead of trying to fight the market, he respected the trend. His box theory helped him see that most stocks were not breaking out of their boxes. Instead, they were falling below them. This was a clear signal to stay out. During this period, he made very few trades. At first, doing nothing felt strange. He wanted to take action, but he reminded himself that staying safe is also a strategy. He learned that patience can protect your money, just as much as a smart buy. Darvas watched as other investors lost money trying to guess the bottom. He understood that the market is stronger than any trader's wishes. You cannot control it. You can only respond to it. By staying disciplined, Darvas kept most of his capital safe. When the market later became stronger, he was ready with both money and confidence. This chapter shows the importance of waiting for the right moment. Trading is not about being busy. It is about being prepared, patient, and in control of your actions. Chapter 7. The theory starts to work. After months of testing and making improvements, Darvas began to see his box theory truly come alive. For the first time, he felt that he had a method he could trust. When a stock broke out of its box, he entered at the right moment instead of guessing or hoping. When it fell below the box, he exited without hesitation. These simple rules helped him avoid emotional mistakes and follow a clear plan. As he applied the method to different stocks, he noticed something exciting. Many of his trades finally moved in the right direction. It wasn't luck. This time, there was logic behind each decision. He also became more confident in letting winning stocks grow instead of selling too early. He understood that big profits come from strong trends, not small, quick moves. To keep improving, Darvas wrote down every trade, noting why he entered and exited. This helped him see patterns in his behavior. He realized that discipline was just as important as strategy. When he followed his rules strictly, he did well. When he tried to guess the future or break his own rules, he suffered losses. This pushed him to become even more consistent. This chapter marks a turning point. Darvas felt that he finally had a map to navigate the market. His box theory was working, not just on paper, but in real trades. The success he experienced here gave him the confidence to scale up, take bigger positions, and aim for larger gains. The foundation for his million-dollar achievement was now strong and ready for the next step. Chapter 8. My first $500,000. With his method working, Darvas continued trading with greater focus. As he followed the box theory, some of his stocks climbed quickly, breaking into higher boxes again and again. Each time a stock moved to a new box, Darvas added to his position carefully, making sure the trend remained strong. This allowed him to grow his gains without taking unnecessary risks. As his profits increased, Darvas felt a mix of excitement and responsibility. He knew that making more money could also lead to more emotional pressure. To stay balanced, he kept reminding himself to trust the system and not get carried away by greed. Even when he saw big increases in his account, he avoided celebrating too early. He had learned from his earlier mistakes that the market can change suddenly. During this period, Darvas also became better at identifying strong stocks. He looked for companies with high volume, strong upward trends, and positive market behavior. Instead of following tips from others, he followed the price. This helped him avoid weak stocks and focus only on winners. His dedication paid off when his trading account crossed the $500,000 mark. This was a huge moment for him. He had never imagined earning $500,000 from the stock market, but instead of relaxing or slowing down, he used this success as motivation to continue learning and improving. This chapter shows that growth comes from consistency. Darvas reached his first major milestone not by chasing shortcuts, but by applying a simple system with discipline and patience. Chapter 9. My second crisis. Just when things seemed smooth, Darvas hit another crisis. After making $500,000, he started feeling more confident, maybe too confident. He began taking larger positions and believing he could predict the market more accurately. Without noticing, he slowly drifted away from his strict rules. Then the market changed. Stocks that once moved up started falling. Some of Darvas's trades broke below the box before he reacted. Instead of exiting fast, he hesitated. His emotions, fear, pride, and confusion took over. As a result, he lost a large amount of money in a short time. This crisis felt worse than the first one because now he had more to lose. The emotional weight of seeing big profits disappear made him question himself. However, instead of giving up, he again turned his failure into a lesson. He looked closely at what he had done wrong. The answer was clear. I broke my own rules. Darvas realized that success can make people careless. The more he earned, the more he thought he was smart enough to bend the rules. The crisis reminded him that the market does not reward ego. It rewards discipline. He promised himself that he would never ignore the box theory again. This difficult period helped Darvas become stronger. He rebuilt his confidence, returned to his rules, and protected his trades more carefully. The lesson of this chapter is powerful. Even experienced traders make mistakes, but what matters most is learning from them and returning to discipline. Chapter 10. $2 million. After recovering from his second crisis, Darvas returned to strict discipline. With renewed focus, he searched for strong stocks that fit his box theory perfectly. He waited patiently for breakouts and ignored anything that did not meet his rules. As a result, his trading became more stable and reliable than ever. During a period when several industries grew rapidly, Darvas caught some major trends. These stocks rose through box after box, each time giving him a clear signal to increase his position. Because he followed his rules exactly, he was able to ride these trends without fear or hesitation. His profits began to grow at a surprising speed. As the months passed, his account reached numbers he had never imagined. Finally, after years of learning, mistakes, improvements, and disciplined effort, Darvas achieved what the book's title promises. He made more than $2,000 from the stock market. This milestone was life-changing, but more importantly, it proved that his method worked when applied with consistency and patience. Darvas knew that the money was not earned through luck, but through understanding price behavior, following clear rules, and controlling emotions. This chapter celebrates not only his financial success, but also his personal growth. He became someone who trusted logic over emotion, discipline over impulse, and learning over guessing. His journey shows that anyone can improve if they stay committed to their system and keep growing. Appendix. Interview. The final part of the book includes an interview with Time magazine and various appendices that show how Darvas worked behind the scenes. These materials give readers a deeper look into his thinking and daily habits. The interview explains how Darvas discovered his method and why he believed most traders fail. He talked about how emotions like fear and greed can ruin decision-making. He emphasized that success comes from discipline, not prediction. Darvas also shared why being far from Wall Street helped him, because it protected him from noise and rumors. The appendices include actual telegrams he received while traveling, showing how he tracked prices around the world. There are also charts and notes that reveal his thought process. Readers can see exactly how he drew his boxes, how he placed stop-loss orders, and how he adjusted his positions. What makes this section special is its honesty. Darvas admitted his mistakes openly and explained how each mistake made him stronger. He also encouraged readers to find a method that fits their personality, rather than copying others. His message is clear. You do not need to be perfect. You just need to be disciplined and always willing to learn. This final part helps readers understand the human side of his journey. Behind the millions of dollars was a man who worked hard, stayed curious, and never stopped improving. The appendix and interview remind us that success is built on habits, patience, and continuous self-reflection. Now that we've gone through the key ideas, let me share my personal reflections, what truly spoke to me, and how it connects to real life. Reading. How I Made $2,000 in the Stock Market by Nicolas Darvas taught me many useful lessons about discipline, patience, and smart decision-making. Even though Darvas was not a trader, he was actually a dancer. He found a clear and simple way to grow his money. His story shows that you do not need to be a financial expert to succeed. You just need a good system and the courage to follow it. One big idea from the book is that you must protect your money first. Darvas learned this after losing money many times. In the beginning, he followed tips from friends or bought stocks because the news sounded exciting. Every time he acted on emotion, he lost. These mistakes taught him something important. Guessing is not a strategy. From that moment, he promised himself to use rules instead of feelings. Another key idea is the box theory. Darvas noticed that many good stocks move in steps. They rise to a certain price range and stay there for a while, like they are inside an invisible box. When the price breaks above the box, it may mean the stock is gaining real strength. So Darvas bought only when a stock broke out of its box with strong volume, and he sold when it fell out of the box again. This simple rule helped him avoid random trades and focus only on strong trends. Darvas also believed strongly in not watching the market all day. At that time, he was traveling around the world as a dancer, so he could not sit in front of a stock screen. Surprisingly, this helped him. Because he didn't watch every price move, he didn't panic or overreact. He let the market move naturally and made decisions only when his rules told him to. This reminds me that sometimes stepping away is better than staring at the screen. Another important lesson from the book is that success comes from small, steady improvements. Darvas didn't become a millionaire overnight. He grew his account step by step. Every time he made a mistake, he wrote it down and studied it. Every time he did something right, he tried to repeat it. His goal was not to win quickly, but to get better over time. This mindset is helpful not only in trading, but also in school, sports, and life. I also learned about the power of self-control. Darvas followed his stop-loss orders strictly. If a stock moved against him, he sold it immediately, even if he felt sad or disappointed. He knew that big losses can destroy a trading plan. By limiting losses, he gave himself more chances to win later. His discipline is something many people struggle with, including me. Sometimes, when things go wrong, we hope they will magically fix themselves. Darvas teaches us that hope is not a strategy. Action is. The book also shows the importance of confidence without arrogance. Darvas believed in his system, but he never thought he was smarter than the market. He stayed humble and let the price tell the truth. When his system showed danger, he got out. When his system showed strength, he stayed in. His success came not from being perfect, but from respecting the market. After reading the book, I understand that trading is not about being lucky. It is about building habits, good ones. Darvas teaches us to stay calm, follow clear rules, avoid emotional decisions, and always protect ourselves first. These lessons are helpful even if we do not trade stocks. They can guide us in school, relationships, and personal goals. If we stay patient, learn from mistakes, and use a clear plan, we can reach impressive results. Overall, how I made $2,000 in the stock market is more than just a trading story. It is a lesson about discipline, responsibility, and believing in long-term growth. Darvas shows that ordinary people can achieve extraordinary things when they think carefully and act with patience. His journey inspires me to build better habits and to trust the process, even when progress feels slow. With the right mindset, anyone can create their own success story. Before we end, I'd love to share 5 powerful thoughts from this book. They might inspire your next move in life. 1. Strong results come from following clear rules, not from guessing or chasing tips. 2. A good trader protects their money first, because one big loss can destroy many small wins. 3. When a stock breaks out with real strength, it often shows the start of a powerful trend. 4. Discipline means acting on your plan even when your emotions want to do something else. 5. Success grows slowly at first, but it becomes unstoppable when you learn from every mistake. Thanks for watching. Remember, every smart choice moves you one step closer to your goals. Like this video if you want more insights, and subscribe for more brilliant thoughts.